Hello friends, today we're going to learn how to pass journal entries. Journal, Journal, the book in which we write journal entries for the first time. In a business, as and when the transaction takes place, we record it in a rough book and then we record it in a formal book, right? Now in the rough book, something like transactions. From there, you pass necessary journal entries. This becomes the base for the remaining entire activities. In the previous videos, I showed you from journal entries, ledger posting, trial balance, financial statements. So the base foundation is journal entries. If this is wrong, the entire process will be wrong. So to be very careful while writing journal entries. Is it tough? Not at all. It is completely based on the rules of debit and credit. How we are going to do it? I have written few transactions on the board. This is my working area for you to understand. And here we are going to write the journal entries. I am not writing the formal columns that you can see from your books. Let us learn how to write. Let us give more emphasis on the conceptual knowledge. Presentation you can manage anyhow. Anyway, the first transaction, children. Started a business by investing rupees 1 lakh. Whenever you start any business, obviously you have to bring some money from your home, from your friends, whatever the case may be. Here you are bringing 1 lakh. How to write journal entries? Go back to the same old routine process. First determine whether it's a cash transaction or a credit transaction. Fine. In this case we know it is what transaction? I'll write down it is a cash transaction. Okay, that is one keyword. I need one more keyword. You are bringing something from your home, right? It can be considered as what? Your capital. Okay, so there are two accounts, cash account and capital account. Now cash account, right? Let me just write on the word account. Cash account. We studied the three types of account: personal, real, nominal. Cash is what type of account? Real. Capital? Personal. Okay, fine. Now the rule of real account. Debit what comes in, credit what goes out. Cash is coming inside the factory. So cash account will be debited. Capital account. Personal. Debit the receiver, credit the giver. Owner is the giver. I am giving the money to my own firm. So here it becomes credit. The previous video I have taught you how to identify which account to be debited and which account to be credited. Now once you have determined this, let us write down the journal entry for this. Date 1, journal entry, cash account debited 1 lakh to capital account. Oh, simple. Let's try one more. Open the bank account by depositing rupees 10,000. Fine. Again, cash or credit? Obviously cash, right? Because you are depositing money in the bank. What is the second keyword? Where is the money going? Bank. Cash, real, bank. Funny, it can be personal as well as real. Bank account is your asset, so it's a real. But bank, ICICI Bank, HDFC Bank, Corporation Bank, State Bank of India, they are all an artificial living being also. So they can be considered personal also. Won't make any difference to us. Look at the rule over here. Cash account, real. Debit what comes in, credit what goes out. Cash is going out. So what I'll do to cash? I'll credit cash. Fine. What will happen to the bank? If you think from the personal accounts point of view, debit the receiver. Fine. If you think from real account point of view, debit what comes in. Bank balance is coming in, cash balance is going out. In either way, it will be debited. Either you think from personal accounts point of view or you think from real account point of view. My suggestion is take it as a personal account. Now the journal entry for this: bank, debit, cash, credit. The second entry: bank account debited to cash account 10,000. Third one, purchase goods of rupees 10,000 from Mr. A. Now पहले दो तो easy थे, they were cash transactions. Now this is a credit transaction. Why? The name is mentioned. Okay, then the first keyword, Mr. A. Obviously personal account. But what is the transaction about? Purchase. Okay, so second keyword, purchase. Purchase goods. What type of account? Real. Real account rule, debit what comes in, credit what goes out. Purchase, goods coming in, so purchase will be debited. Mr. A, personal account, debit the receiver, credit the giver. He is giving me the goods, credit. Journal entry, purchase account debited 10,000 to Mr. A, 10,000. Basic level of journal entries, right? These are basic level of journal entries, but the rule does not change. For example, in this case, the very next case, purchased machinery of rupees 50,000. Okay, cash or credit? Cash. One is cash. What did you buy? Machinery. Yesterday I explained to you, if you are buying goods, use the word purchase. But if you are buying assets, name the asset. What is the name of the asset? Machinery. Both real. You are buying machinery, debit what comes in, cash is being paid, cash is going out. So the journal entry, machinery account debited to cash account. How much rupees? 50,000. Now understand, machinery is an example of an asset. You can buy any of the assets. You are purchasing a land, you are buying investments, you are investing in some company's shares, you are buying a vehicle, you are buying furniture, you are buying a laptop, anything. What will be the change? Instead of this, you will mention that name. So what will happen? That account debited to cash account. If you are paying by a check, instead of cash, the word that you will use is bank. Simple. So instead of understanding hundreds of journal entries, right now I can give you machinery account to cash, building account to bank, furniture account debited to cash, investment to bank. Understand the basic logic. What is the logic? Identify the keywords, right? And then depending upon the rule of debit and credit, apply it and you get your answer. It won't make any difference. If it is credit purchase, again what will happen? One keyword definitely what? Real account. If in the video of rules of debit and credit, I always emphasize, give more importance to the rule of real account. Look at all the journal entries. There is one rule account or one real account. And you apply the rule of real account, debit what comes in, credit what goes out, matter is solved. As far as journal entry is concerned, if your real account concept is clear, then the journal entry is very easier. See, there are some shortcuts also, right now. For example, paid rent rupees 1,000, fine. Paid rent rupees 1,000. Now I'm going to go for a shortcut. Okay, one keyword, cash. Okay, another is rent. You are paying rent. Cash real, rent nominal. Now technically I'm supposed to use both the rules. Rules of real account, rules of nominal account. I forgot the rule of nominal account. I just remember the rule of real account. And I think in that way, debit what comes in, credit what goes out. Here, when I am paying rent, cash is not coming in, cash is going out. So cash will be credit. Okay, obviously the next account will become debit. Getting this point? This is also a shortcut for you. If you are clear with which account, real account. One account will be debit or credit, the opposite will have the other effect, right? So here, entry number 5, rent account debited 1,000 to cash account. 1,000. Sold goods of 15,000 to Mr. B. Mr. B, again what account? Personal. It's a credit transaction, personal, right? But if it is a credit transaction, it will be of two processes only, beta. Either you are buying goods on credit or you are selling goods on credit. Here it is sales. Sales comes under what type? Real. Again, debit what comes in, credit what goes out. Sales, goods are going out. Credit, Mr. B is the receiver, So it will be debit. A very simple journal entry. Mr. B to sales. How much rupees? 15,000. 15,000. Last one, paid salary rupees 4,000. Again, cash or credit? Cash, which is real. Again, what are you paying? You're paying salary. Salary, nominal account. Cash, real account. Cash account rule. Debit what comes in, credit what goes out. Today, you might have heard me telling the rule 7 times. That's why I told in the previous lecture, write down these rules 50 times, especially the rule of real account. If you know that, the journal entry matter is very easy. Now here, cash, paid salary, cash coming or going out? Going out. Credited. Salary is your expense, debit, expense and loss, debit. Now while writing the journal entry, as you can see, first the account which is being debited, then the account which is being credited. So it is salary account debited to cash account, rupees 4,000. Getting the concept of journal entries, right? You will not have that many complex journal entries, but the basic funda will remain same. Now, for example, instead of started a business by investing 1 lakh, issued equity share capital of rupees 1 lakh. Issued equity share capital of rupees 1 lakh. Again, in that case, what happens? You won't get cash. You will get what? Bank balance. Shares का पैसा कहाँ आएगा बेटा? बैंक में जमा होता है IPO में. तो वहाँ पे क्या जाएगा? Bank account debited to, instead of capital, you will mention equity share capital. If you have issued preference share capital, what will you write? Bank account debited to preference share capital. Simple. The remaining entries from 3, 4, 5, 6, 7, it won't change. Depending upon the firm, whichever kind of the firm, whether it is sole proprietorship, partnership or joint stock company, these are the basics that won't change. They have to buy, they have to sell. What changes? The entry for capital. These are the entries which changes from firm to firm based on the nature. Clear? Right? And this is the way you are supposed to write the journal entry. Understand this? This is a rough work. This you don't have to do in your notebooks. This is just for your understanding. This work initially you do like this. Later on you start thinking. Virtual mind में use करेंगे हम, and then we'll go to apply it over the journal entries.